Hello guys, Richard Williams Jr. here from Profits of Forex, guys, and I want to welcome you guys to the channel. If this is your first time tuning in and watching some of our content, like, subscribe, follow us over here on YouTube. Hit that notification bell so you can be notified when we update and post up and upload new videos. Go over to Facebook, join our free group, ask and request for an invite over at the Profits of Forex Facebook group over on Facebook, and join in the conversation below with the comments and you know, share and put in something knowledgeable that we all can grow from. This is definitely a benefit for everybody that's here, right? And we definitely want to add to everybody else's trading career or trading life and knowledge and things like that. So when we think about this, we want to share what we know. It may help somebody else. So definitely get in the comment section below. Share what you know. Share what you believe you know. As a perspective of the market can always help everybody out. So with that being said, guys, we're going to jump right into it. This will be actually the fourth video in this series. We did a video on explaining what moving averages were. I also did a video on the simple moving average strategy, right? I did a video also on the double moving average strategy, and I also said I was going to upload another more advanced technique using moving averages with the triple EMA strategy, which is basically using 3 EMA moving averages or exponential moving averages as part of your trading scheme or as part of your trading strategy. So with that being said, this video may not be as long. I'm going to go into it. You know, I love recording and sharing with you guys what I know, and just hearing from you guys is definitely always a plus for me. Makes my day. So with that being said, we're going to dive right in. I already had the moving averages already on my screen, but what I'm going to do is I'm going to delete them because I want to show you step by step what you're going to basically be doing. And basically just using the 3 moving averages to plot and find an entry and exit in the market, just like we did with the single moving average strategy, as well as the double moving average strategy when we use the crosses. We're going to kind of do the same thing here. We're just going to add another layer by adding one more moving average as well, that we can kind of plot our course from and find our entry in the market and exit in the market, making it a little bit more simpler to get in and trade. All right, guys, so I'm going to go ahead and basically exit out of these. And as you can see, you know what I'm going to do is I'm basically going to remove all the drawings so we can go from scratch. I've been doing these videos basically on the GPB Audi because it's been trending really well. And because it's trending so well, it really helps with this strategy. So that's the reason why we've been really using the GPB Audi. It's been really trending and it kind of helps. It's a nice, good trending areas to show what the moving averages look like, what the strategy look like when you put it all together and all the elements together. As I explained before, if you don't know what moving averages are, there will be a link in the description that explains that. It leads to the video that I recorded explaining in detail what moving averages are, as well as a link in the description with the related videos as well that you can go back and watch in the series, maybe, you know, seeing what the simple moving average strategy looks like and the double moving average strategy, you know, what the crosses looks like, and, you know, find what works for you. It may not all be the same, but, you know, that's the whole idea, having multiple variations and ideas in which you can use that may be comfortable for you as well in this. So with that being said, we're going to go right into it. We're going to go over here to our indicators. As I said, this is the triple EMA strategy. So you're basically going to be looking for our moving averages or exponential moving average right here, right? And what we're going to do is we're going to use 3 of these. So we'll just click it 3 times, guys. And you'll definitely be able to do this on TradingView if you have the free subscription. You know, you don't need the pro subscription to do this at all. So you'll be able to load up the 3 indicators on your screen at once. Basically, now once we've done that, you definitely should favorite just in case. You might want to come back to that. Move this out the way. And what we're going to do is now we're going to go over here to our settings. And what we're going to do is change the length and period of time of this moving average to 10, right? That basically means it's going to go back 10 candles, the close of the candle, 10 candles at the close of those candles, and it's going to project the average out of price. And then we want to also put this one on not 20, but we're going to do 25. We want to go back 25 candles. And then we want, I don't even think I did. Yeah, there we go. 25 candle. Yep, 25. That's what we want. While we're in this, let's change the styles, guys. Let's go in here and make this a little bit thicker. We're going to make this line orange. And we're going to do the same thing with this one right here real fast. Let me go to green. And we're going to go here. That's done. And then the third one, we did our 10 and our 25. What we're going to do is we're going to basically make this one the input period of 50, right? And let's change the size of it as well. Let's change the size of it. Go in here to the lines, make it a little bit thicker. But let's change the color, or we could keep the color pink. So we got orange, yellow. And you know what we're gonna do? I know we said yellow. For recording purposes, we're just going to go ahead and leave it. Yeah. Now I want something that's recognizable. Maybe the yellow, but that seems too close. We could go with white. Let's go with white. There we go. All right, guys, we figured it out. So we got all our different colors set up, right? We know that our 10 EMA is our green, yellow is our 25, and our white is our 50 EMA. And basically this same strategy is the same set of rules, guys. We're looking for a price. Let me stretch this out so we can get in close and you can see what I'm talking about. We are looking for price right here. See where price starts to squinch together over these moving averages? Right here where these moving averages come together and press. We're looking for price to break above, once again, our 10 EMA, right? It wants to come above everything, but once it touches that 10 EMA, right, then we're definitely looking at a buy, right? We're looking for it to come back and retest, and then our entry will be here. I thought I got it. Okay, I got it. Our entry would be right here, right? So that's our entry, guys, and we will just hold price as long as it's above this or in front of this 10 EMA. We can hold it. We can always use that 10 EMA as our close of the entry, right? We can use our entry, our exit here, meaning we can use this as our exit here, right? Right. So once price breaks below that first moving average or the 10 period exponential moving average, then we're going to we can exit our trade. This is up to you guys, or we can wait. We have 3 ways to exit the trade with profit. The thing is, depending on where you want to hold to, my thing would be I would either take my profit here, right? I would take my profit here when price probably breaks below this. Or if I wanted to hold, just in case I thought price might come back up, I would not hold past the cross. See what this cross is? Right? Now, if you haven't and don't understand what that means, is when you go back in the other video and watch the double moving average video, when we use 2 moving averages, but we're using the cross as our indication to get in the market and to get out of the market. What you're looking at is these are your 2 points in which you could see the market has already changed its bias, right? And you can get out of the market, right? And if you did, okay, let's say we got in here, our first entry, right? And then we got out right here. That's 312 pips. Now, if you got out and held it a little bit longer at the cross, it's 280 pips. But if you waited completely till it got past this 50 EMA, you know what I'm saying, you're giving up about another 100 pips. So I would prefer to get as many pips out of my trade as I can. So I would probably take my first exit. If not, and I felt really like I had a good confidence that it's going to continue up, I will hold it until I saw the cross. Because once I see the cross, that's an indication that price and momentum is starting to change. All right. So that's what I would do. That would be my suggestion to you guys when you use a strategy. Use these as your 2 entry points, depending on, you can tell whether the market's going to kind of push up. If it seems like it's slowing and it's really turning, then you don't hold. That's definitely the number one thing you don't want to do in the beginning. I know I did that myself. I held my trades too long. So the profits I could have generated could have been a lot more vaster and more if I would have just got out when I knew when to get out. All right, guys. So with that, that's the same thing that we use in the other strategies, just using more moving averages to add more confluence and more confirmation to our trades, as well as giving us another way of entering, exit the market. All right. So then what we would do is basically, right, because we're looking at this area where the 3 moving averages are coming squinched together, right? We wouldn't probably take our sell to here. This would be our entry right here. Price comes up, retests this area, and of course it's broken below, right? And then at that point, we would take our sell, and we still will come out with, let me squinch this down, 477 pips, guys. Off of this, just off of this trade right here, right? We will come up with 477 pips. Guys, it's really that simple, getting in here. And then basically, like I said, we can, our exits would be right here. We can use the single moving average as an exit, get out with a lot more profit, and we'll see what the market does after that. Or we can get in right at the cross right here, which is still a good place because you can see price has really squinched together and became consolidation area. So that would actually work out really well if you got in here, got out here, or got out here. All right. Using these as our exits in the market, then we'll be definitely good. This is your entry point, right? When price comes together, you see the moving averages start to squinch together. That's a good indication. But seeing price break above our 10 EMA and retest it, and we want that confirmation from that. Once it retests, we want a green candle. So we want to be able to see our buy candle after that. And that's when we enter our trade. And then we exit. Our first exit would be basically based off of our single moving average, which is that 10. As soon as it crosses the 10, then we can get out. Or we can hold a little bit longer till we see the cross and get out. But that's our 2 ways to exiting the market. All right. Getting in and getting out of the market. Right. So then what we'll do is, let me just go ahead and delete that because I didn't mean to do that, guys. And what we want to do, like I said, real quick, as you can see, price is squinching together here. This could be our buy, right? Where we get in here, price went up, and we still would have got 137 pips out of that. Once price came up above, this actually probably didn't retest at all, but you had to go down a lower time frame, and there probably was a retest here. But we'll go more into that, how you can delve down and go into the charts, into the time frames, and really see if you got your retest already. And price went there, and then we got 137 pips out of that trade. And if this trade went for a sell, we would basically be looking at right here, our price went down another 252 pips. And like I said, once again, it's setting up again to do it right off of the cross. So guys, that's the strategy. We went over a little bit more than what I wanted to. So if you haven't, like, subscribe, follow us on YouTube, press the notification button, go over to Facebook and request your free invite to our group as well. And we appreciate everything you guys did in support here. And This is Richard Williams Jr. from Profits of Forex, where trading is simplified.